Hello, good morning everyone, and welcome to this session of the Direct Taxation CMA Intermediate. Yes, good morning Pankaj, future CMA Pankaj, that is the good name, future CMA Pankaj. Good morning Shruti, good morning Asif, good morning Om, good morning Bhavin, Sharan, Mansi, Abhishek, good morning Yashika Jotwani, good morning Ashok, good morning Ananta, good morning everyone. Good morning, and yes, welcome to this session of the Direct Taxation. And yes, guys, we have been successfully able to complete all the 5 heads of income. Many congratulations to all of you for achieving this big milestone. Guys, the 5 heads of income and residential status cumulatively holds at least 50% of marks in your examination. Yes, a few chapters holding big percentage of marks in your examination. These are the 5 most important chapters, the 5 heads and residential status. In the last section, we have been able to successfully complete the 5 heads of income along with residential status. And I am glad to state that many of you have also given me test of all these chapters. So they are not only prepared, but they are prepared to go for the kill. They are prepared to go for the big game in June 2022. Many congratulations to all of you, all the students who have religiously been following this test series and the marathon video series. Many congratulations to all of you. You have successfully been able to complete the 5 heads of income along with residential status. Yes, you might be feeling that, sir, our friends who are giving June 2022 attempt, sir, they are not attending marathon videos. They are not giving your test. We have not seen them in test. Guys, don't feel that you are missing out on something. Sir, we are not able to, enjoy our time. We are not able to watch our favorite movies. We are not able to go out and, venture into water parks or some jumping parks. We are not making merry. We are not doing what we always want to do. We are not able to do that, and all our friends are doing what they want to do. And here we are in the marathon, in the test series, regularly working hard for June 2022 attempt. Sir, we are missing out on our personal profits, on our personal pleasures. We are missing out on that. Guys, I can give it to you in writing. I can give it to you in writing. You are not missing out on anything. 5 years down the line, when those of your colleagues, those of your fellow mates will be struggling for job, you will be doing a job worth 10 lakh rupees, 14 lakh rupees in big companies like ITC, Vedanta, etc., etc. And at that point in time, you will be making merry. You will be enjoying your water parks, theme parks, your favorite series, television series, your favorite sports. You'll be enjoying all of those things. And those students who are currently making merry, they will be struggling hard for getting a decent job. So do not feel that, sir, we are investing our time in studying. They are not. Sir, why should we study? Don't even have an iota of doubt in that particular respect. Guys, please continue working hard. Wholeheartedly give me all the tests which I'm taking every Sunday. This Sunday the test is of chapter income from other sources. The entire chapter will come in test. Wholeheartedly give the test, and trust me, 4 years down the line, 3 years down the line, you will be proud of yourself that yes, you attended these marathon lectures, you religiously gave the test. You will be feeling proud on yourself. Yes, that feeling of pride will overshadow the hard work which you are doing right now. You will feel that, sir, we could have done even more hard work. The feeling of pride, the feeling of power, the feeling of having abundant money, the feeling of buying whatever we want to buy in the world, the feeling of our parents being proud on us, the feeling of our parents getting whatever they want, whatever they deserve, whatever they desire, the feeling of we gifting some expensive gifts to our parents which they always wanted but could not afford. All those feeling will be far better than this hard work, the pain which you are going through right now. So do not worry about the pain which you are going through right now. Do not worry about the late night midnight oil that you are burning right now. just focus on the goal, which is June 2022 examination. And guys, let me tell you one very important thing. The pain is temporary. This pain which you are going through is temporary. But the pride which you are going to get after June 2022 attempt, the pride which you are going to get after June 2022 attempt will be permanent. The pain is temporary, but the pride will be permanent. So I'm very, very happy that yes, my students of CMA Intermediate and CMA Final are working really, really hard towards their goal of June 2022 examination. And yes, they're going to come out with flying colors. I'm eagerly waiting to hear from you. Sir, we got a rank, or we scored above 80 marks in direct taxation. We scored above 80 marks in financial accounting. We scored 19 costing. I'm eager to hear all these words from all of you. So guys, do not feel demotivated. Do not feel that you are missing out on something. Do not feel that you are working hard and your friends are not working so hard. Do not have any such grudges in your mind, in your brain, in your soul. Just work hard towards one goal, which is June 2022 examination. So yes, once again, many congratulations for completing the 5 heads of income. And just to reiterate, audit test series has started. Audit WhatsApp group has been created. Audit test is happening every week. So if you are giving group 2 of CMA Intermediate, please register yourself in the audit group. Please register yourself. If you are a final student, if you are a CMA final student, then 2 test series are going on: cost audit test series and BVM SPM test series. Both the test series are going on. Every Saturday test happen. There's a schedule which is there in the communities tab. Do follow that schedule, and please give test of CMA final as well. If you are a CMA final direct taxation student, group 3 student, then you should give all the chapters which I'm teaching for both intermediate and final, like the 5 heads of income, PGP, capital gain, are relevant for CMA final as well. And yes, I'll be taking up CMA final direct taxation test series separately, where the unique chapters like international taxation, which is not there in CMA Inter, penalties and prosecution, which is not there in CMA Inter, I will take tests for those chapter separately in the test series. That test series will be starting after the test series of CMA Intermediate will end. So yes, today we are going to start um, one of the very small chapters of your syllabus. Rather, these are twin brothers, twin sisters chapters. The chapter is clubbing. The second chapter is set off and carry forward. Okay, so these 2 chapters are small chapters, are not very lengthy chapters, but yes, a question of 4 to 5 marks can come from these chapters in your examination. So these chapters are in that respect quite important, but since they are very small, they are short, you will be able to revise them very, very quickly. So today's session is dedicated wholly and solely on the chapter clubbing of income. We are starting the chapter clubbing of income. And yes, before we start the chapter, please hit the like button on this video so that I am motivated to continue providing you ample marathon videos of whatever subject you, whatever topic you want in direct taxation. So just hit a like button. Yes, we are starting now the concept of clubbing of income. So I want to ask you, what do you mean by clubbing? What do you mean by clubbing? What is a club? Okay. So what do you mean by clubbing? Please answer in the chat box. सर टेस्ट में मार्क्स जिनके अच्छे नहीं आते वो भी क्या रॉक करने वाले हैं? हाँ भी हाँ, जिनके मार्क्स अच्छे नहीं आते वो भी रॉक करने वाले हैं, क्योंकि टेस्ट देना अपने आप में एक बहुत बड़ा माइलस्टोन है. तो अगर आपके टेस्ट में मार्क्स अच्छे नहीं भी आते तो भी इट्स ओके. ओके, व्हाट डू यू मीन बाय क्लबिंग? ओके, व्हाट डू यू मीन बाय क्लबिंग? व्हाट इज द मीनिंग ऑफ वर्ड क्लबिंग? ओके, अभिषेक इज सेइंग एडिंग, पूजा इज सेइंग पुटिंग टुगेदर. ओके, combining. Ashok is saying combining. Oh, no. Someone is saying to dance at night in the discotheque. No, I'm not talking about that clubbing. Nalayak. Someone is saying to dance in the discotheque. Not that clubbing. No. Nalayak. No, it is not clubbing, which is going to club, going to discotheque at night and dancing and having cold drink and having, some fun and frolic. Yes, right. Om Kakati is right. It means combining. It means to combine, to join, to put together. Yes. That is clubbing. Okay. So let me first of all define what do you mean by clubbing. Okay. Now, there is income of Mr. A. There is income of Mr. A. Mr. A is earning some income. Now, ideally, that income should be taxable in hands of Mr. A. Suppose Mr. A is earning income of rupees 1 lakh. So what do you think? Who should pay taxes on this 1 lakh? Mr. A is earning income of rupees 1 lakh. Who should pay taxes on this 1 lakh? The question is that. Who should pay taxes on this 1 lakh? Of course, Mr. A should pay taxes on this 1 lakh. On this 1 lakh rupees, Mr. A should pay the taxes. But under the clubbing provisions, what happens is income of Mr. A, but the taxability arises in hands of Mr. B. Yes, some other person. So income of Mr. A will be Nalayak Abhishek. Abhishek is saying go out to nightclubs. Abhishek, you don't have to go out to nightclubs right now. Now it is time to study. Nalayak. So clubbing means income of some other person getting clubbed in hands of some other person. So income of Mr. A getting clubbed in hands of Mr. B, and then Mr. B is paying taxes on that income. That is known as clubbing of income. In an ideal situation, in a very plain vanilla situation, guys, income of Mr. A should be taxable in hands of Mr. A only. If in Mr. A is earning income, then it should be taxable in hands of Mr. A. But sometimes what happens is income of Mr. A is clubbed in hands of Mr. B, and then Mr. B has to pay income on the has to pay tax on the income of Mr. A. So Mr. B will pay taxes on two incomes, his own income and income of Mr. A. He will pay taxes on two incomes. Okay, this is known as clubbing. But sir, this is so unfair. This is so grossly unfair. This is incorrect. This is absolutely exploitation. This is wrong. Why would Mr. B pay taxes for the income which is earned by Mr. A? Why would Mr. B pay taxes? This is wrong, sir. This is wrong. Guys, these provisions emanate from over smartness, from the the shrewdness of the taxpayers, over smartness of the taxpayers. How? I'll tell you. Mr. A is an employee of a very big company. His salary is 14 lakh rupees per annum is his salary. Mr. A is an employee of a company. His salary is 14 lakh rupees per annum. He has a minor child who's only 6 years old, right? Mr. A diverts his income to his minor child's account. So he requests the employer, dear employer, my salary is 14 lakh rupees, but out of 14 lakh rupees, you please transfer 5 lakh rupees to my kid's bank account and say that my kid is your employee. This is very, very irrational because a 6-year-old kid cannot be an employee of a person he cannot work, right? So in that case, guys, this is the shrewdness to avoid tax. How would tax be avoided, guys? Salary slab, 5 lakh rupees income for a resident is not taxable. So in a salary kind of a situation, Mr. A will get a exemption of 5 lakh rupees, and his son also get an exemption of 5 lakh rupees. Double benefit will be acquired. These are the situations where over smartness of the people result into tax evasion, and that is why clubbing provisions are in place. Now I'll change this scenario, guys. Okay. Now suppose Mr. A is earning salary income from his company and he is having a minor child, and this time it's not the company who's paying salary to the minor child, but it is a child's own talent. A child is a singer or child is a born dancer. Some children dance at a very young age. He's a dancer and he participates in some competition and wins some amount of money. Guys, that money cannot be clubbed. That money cannot be clubbed because that money is earned by Mr. A's son himself due to his skill, due to his talent, due to his natural ability to dance. That is the reason why this income has been earned. So you have to see, okay, you have to see whether there is a malified intention in the transaction. If there is a malified intention in the transaction, if there's a wrong intention in the transaction, only then clubbing provisions will apply. Otherwise, clubbing provisions will not apply. So that is how we apply the clubbing provisions. So let's start the Okay. So there was a short technical glitch. Now, am I audible to you? Am I visible to you? Please write a yes if I'm audible and visible to you. There was a small technical glitch. Video was the issue. Okay. Now I think you are able to see me. All right. So yes, the clubbing provision will apply in certain cases. They will not apply in all cases. They will apply in certain cases, and those certain cases are defined in the act itself. In those cases, clubbing provisions will apply, and clubbing provisions will have a harsh repercussion that income is earned by someone else, but it will be taxable in hands of someone else. So there will be hard repercussion in case of clubbing provisions. So before coming on to the clubbing provisions, let us read certain general principles, certain general things which are there with respect to clubbing. Okay, so computed income to be clubbed. First principle is that, guys, whatever income you want to club, first of all, you have to compute the taxable income from the total income, and then the clubbing provision will apply. So, for example, Mr. A's income is taxable in hands of Mr. B, right? Mr. A's income is taxable in hands of Mr. B. Suppose now, while Mr. A's income is taxable in hands of Mr. B, guys, whatever is the computation of taxable income which is there in hands of Mr. A, that should be computed first, and then the computation should be added in hands of Mr. B. I'll give you a simple example, okay? Now, Mr. A is earning income from house property worth 10 lakh rupees. And the clubbing provisions are saying that this 10 lakh rupees should be clubbed with the income of Mr. B. Now, guys, before clubbing 10 lakh rupees in the income of Mr. B, you have to first compute the taxable income which will accrue from this 10 lakh rupees. You remember in house property sections we had done NAV, then 30% of NAV should be reduced, then will come the taxable income. You compute GAV computation is a different mechanism altogether. All those procedures which are required to be done, they are to be done first while computing the taxable income of Mr. A, and then the taxable income is to be clubbed in hands of Mr. B. So the first principle is computed income to be clubbed, not the gross income, not the income which is gross is to be clubbed, but the computed income is to be clubbed. Whatever income is computed out of the provisions of the Income Tax Act, that income will be the income which is clubbed. So the most important thing is that computed income should be clubbed and not the gross income. Okay. Second provision, clubbing is done headwise. Now, this is a very, very important provision, guys. Suppose the income which is there in hands of Mr. A is from income from house property. So, in hands of Mr. B also, the same income will represent income from house property. It should not be so that, Mr. B is offering this income as income from other sources. No. Whatever head was applicable to Mr. A, Mr. B should also offer this income to tax under the same head. So if Mr. B has house property income, then Mr. A's income should also be added to Mr. B's house property income, and then the taxability should be ascertained. So the house property income of Mr. A should be clubbed with the house property income of Mr. B. So head-wise clubbing should be done, head-wise, which means whatever head is the income taxable in for Mr. A, the same head the income will be taxable in hands of Mr. B. So clubbing should be done head-wise. Third, deduction under Section 80 is allowed to the assessee whose hands income is clubbed. Now, the question is, income is taxable in hands of Mr. B. Income is earned by Mr. A. Who should claim Section 80 deduction? Right? Because Section 80 deduction can also be there. Sir, what is Section 80 deduction? Guys, Section 80 deduction is when you, out of your income, deposit some amount or contribute some amount to some investments, you will get certain deduction from Section 80C to Section 80 capital U. Right? All those deductions will be applicable in hands of Mr. B. Who should claim the deductions? Mr. B should claim the deductions under Section 80. From Section 80C to 80U, Mr. B should be claiming the deductions. Mr. A should not claim the deductions. Mr. B should claim the deductions because taxability is arising in hands of Mr. B. So Mr. B should claim the deductions. Then the fourth rule is clubbing of loss shall also happen. So guys, if clubbing provision is applicable on income, then clubbing provisions are applicable on losses as well. So if Mr. A has some loss from house property and that is ought to be clubbed with the income of Mr. B, then loss should also be clubbed. Okay, along with the income, the loss should also be clubbed. So it's not only that income should be clubbed, income and losses both should be clubbed. Yes, sir. If you club loss of Mr. A with profit of Mr. B, then profit of Mr. B will reduce. Taxability will reduce. So what? I'm okay with it. Income Tax Act is okay with it. If incomes are clubbed, then losses will also be clubbed. So if Mr. A has some losses, that will also be clubbed under the relevant head of Mr. B as well. So losses will also be clubbed. So clubbing loss shall also happen. Clubbing of loss shall also happen. Next, TDS credit to be given to the person in whose hands the income is clubbed. Very, very important principle, guys. Now, while Mr. A received the income, there must have been some TDS deduction. So what is TDS deduction? TDS means tax deducted at source. So when income was being given to Mr. A, there would have been some TDS which would have been deducted from income of Mr. A, which Mr. A should be given the credit at the time of filing of return of income. This is the concept of TDS. Now, if TDS is being deducted for Mr. A, if TDS is being deducted for Mr. A, guys, the income is being offered by Mr. B. Now, problem is Mr. A, even if he claims TDS, what is the use? Because he's not offering the income to tax. This income is being offered to tax by Mr. B. Mr. A is not offering the income to tax. Who's offering the income to tax? Mr. B is offering the income to tax. Now, will the TDS claim of Mr. A be allowed to Mr. B? Answer is yes, because this claim is useless for Mr. A. What will Mr. A do of this TDS claim, because he's not offering that income to tax? What is the use of this TDS claim of Mr. A? So guys, I'll give you a practical example. Okay, please don't get confused. I'm giving you an example. Mr. A has income of 1 lakh rupees, out of which he deducted TDS of 10,000 rupees, right? Mr. A got an income of 1 lakh rupees, but the payer of the income deducted 10,000 rupees, which means Mr. A received 90,000 rupees. Now, ideally, Mr. A will file a return of income with 1 lakh rupees and tell Government of India, hey, Government of India, listen. I have already paid taxes on this 1 lakh rupees. Please don't recover any taxes from me. This is the usual circumstance. Mr. A will request Government of India that, look, Government of India, I have already paid taxes in the form of TDS on this 1 lakh rupees income. Please don't take any more taxes from me. This is what Mr. A is going to tell to Government of India. Now, the situation is, when this income will be clubbed with income of Mr. B. Guys, Mr. B has not, got this deduction done. This deduction was done by Mr. A. Now, the question is whether Mr. B can tell Government of India, hey, Government of India, I have already paid 10,000 rupees of taxes on this income. Please don't recover taxes from me. The same thing what Mr. A was telling to Government of India. Can Mr. B also say the same thing to Government of India? That is the question. Answer is yes. Mr. B can say this thing to Government of India, because Mr. A will not pay any taxes, will not offer this income to tax. So even the tax credit will also not be taken by Mr. A. Therefore, Mr. B is eligible for TDS credit. Whatever TDS is deducted from this particular payment, the income of Mr. A, the eligibility will be of Mr. B. Mr. B will be eligible for claiming the TDS. Absolutely, guys. Now, one very important catch in this entire concept, guys, this credit claim applicability is not there in case of advance tax. So suppose if Mr. A pays some advance tax on the income which he has earned, and if Mr. A tells Mr. B, take credit of this advance tax credit is not possible. TDS credit is possible, advance tax credit is not possible. Then, sir, Mr. A has already deposited the advance tax. Is it a waste? Is it completely gone? Answer is no, it is not gone. Mr. A will claim for a refund of advance tax. But the credit will not be given to Mr. B, just like in case of TDS. Credit will only be given in case of TDS to Mr. B. The advance tax will be refunded to Mr. A. That is the provision. So TDS credit can be given to the person in whose income the clubbing is being done. Okay. TDS credit can be shifted, but advanced tax credit cannot be shifted. That is the principle. So these are the general principles of this particular chapter, clubbing of income. Now we move on to the specific sections. We move on to the specific sections. Yes, sir. So the first specific section is transfer of income. First specific section is transfer of income. Now this is a very, very smart move which is undertaken by some of the SSEs, and this smart move is with the purpose of avoiding tax. Okay, so government of India has pulled this loophole, has plugged this loophole. You cannot be over smart. So what is the over smartness which you're talking about, guys? The over smartness which I'm talking about is, I have an asset that is yielding income to me. By way of an agreement, I transfer the income to any of my relative, like my spouse, my mother, my brother, any of my relative. I transfer the income to them with an intention to evade taxes, because they will be claiming slab rate exemption till 5 lakh rupees. I will be claiming slab rate exemption till 5 lakh rupees. There'll be double benefit which will be taken by both of us. There'll be double reduction which will be taken by both of us. So when double deduction will be taken by both of us, this will be a tax evasion. This will be a tax evasion. Guys, in this situation, when the asset, I am the owner of the asset, so I should be, earning the income also. How can I transfer income to someone else? But guys, I've done that. If I have done that, then that income will be clubbed in hands of income of the person who's owning the assets, in this case me. I'm the owner of the asset, the income will be clubbed in hands of owner of the person. I'm the owner of the person, so income will be clubbed in my hands. Okay, so whosoever owns the asset, he should pay taxes on the income which is derived from the asset. Whosoever owns the asset, that is the condition, precondition. Owner is the person who's offering the income to tax. Owner is the person. All right. So when you transfer only the income, when someone transfers only the income to someone else, there can be two possibilities. Without transferring the asset, you have not transferred the asset. Asset is still in your name, but you have transferred the income. How smart are you? Okay. How smart? You have transferred the income, but you have not transferred the asset. Then, guys, income to be clubbed in the hands of the transferor. So the person who's transferring the income will be taxable in hands of the transferor. So without transferring the asset, if the income is transferred without transferring the asset, then income will be clubbed in the hands of the transferor. Whosoever is transferring the income will be clubbed in the hands of the transferor. That is the principle, the first principle. So if you want to transfer the income, please transfer the asset also. So if I'm owning an asset, why would I only transfer income to someone else? I will also transfer the ownership of the asset. This is if you're transferring only the income and not the ownership of the asset. So if the income is transferred from that asset without transferring the asset itself, then it will be clubbed in the hands of the transferor. Second aspect is with revocable transfer of the asset. Now, you are transferring, if you're transferring the asset also and income also, clubbing provision do not apply. Okay, but if you do not transfer the asset but you transfer the income, then clubbing provision will apply. Now some over smart people will do another thing. What is that another thing? They would transfer the asset with revocable transfer. They would say that, okay, I'm transferring the asset to my spouse with a condition that after 1 year this asset will be back transferred to me, or after 2 years this asset will be transferred back to me. This is again wrong. This is again wrong. This is known as a revocable transfer, a transfer which will revoke after a few years. What do you mean by revocation? What do you mean by revocable transfer? Means when the asset gets retransferred to the original transferor, or when the original transferor has the power to reassume the ownership or the rights in the assets. This is clearly over smartness. Currently, you are saying I am transferring the assets to my spouse, but after 5 years, these assets will be transferred back to me. This is known as revocable transfer, and this is treated as good as not transferring the asset and transferring only the income. So even in case of revocable transfer, income to be clubbed in the hands of the transferor. Income will be clubbed in the hands of the transferor. So in two situations, guys, in two situations, the income will be clubbed in the hands of the transferor. Situation number one, when you are transferring it, transferring only the income and not transferring the asset. You're transferring only the income, not transferring the asset. I have a house property. I am getting rent from it, and I'm asking my tenants, okay, going forward, you pay the rent to my mother or pay the rent to my spouse without transferring the asset. Asset is still in my name. House property is in my name, but the rental income is being transferred to my spouse. This is known as transfer of income without transferring the asset. Guys, in this particular case, you are going to club the income in the hands of the transferor. You are going to club the income in the hands of the transferor. Some students are saying that the video is blur. Guys, is the video okay now? Please confirm if the video is okay now. The video is actually at a high resolution. There shouldn't be any problem. Okay. All right. Now, guys, there are certain exceptions to this rule. Whenever there is a revocable transfer, transfer which is revocable, even then we will not club income in certain cases. So there are certain exceptions to this rule. Now let us see what are the exceptions to this rule. So the rule is revocable transfer is subject to clubbing. Revocable transfer which is subject to revocation, is eligible for clubbing. So revocable transfer is eligible to clubbing. This is the general principle. There are certain exceptions to this rule. Some revocable transfers are not subject to clubbing. What are those? We are going to study that. Okay. Transfer by way of trust or otherwise, which is irrevocable during lifetime of the beneficiary or the transferee. This is a very, very important exception, guys. Now, I am transferring my asset to my spouse, and there's a clause to it that if, suppose, God forbid, if my spouse dies, if my spouse meets with an accident and her life is ended, then guys, the asset will come back to me. You may feel that this is a revocable transfer and subject to clubbing, but Income Tax Act says no, this is not a revocable transfer. This is an irrevocable transfer because it is not getting the revocation is not getting fulfilled till the lifetime of the beneficiary. So if the revocation doesn't happen till the lifetime of the beneficiary, during the lifetime of the beneficiary, and if the revocation happens after the lifetime of the beneficiary, then I will say that it is a irrevocable transfer. If the revocation happens after the lifetime of the beneficiary, then I will say that it is a irrevocable transfer. Similarly, guys, in case of trust, okay, in case of trust, this is a trust structure. There's a trustee. Legal owner of the trust is the trustee. Then there is an appointer, the person who has appointed this trust, governed by a trust deed. There is a assets of trust, and there are certain beneficiaries. Okay, these are the beneficiaries of the trust. Now, where does this structure typically is used? This structure is used where parents wants to secure future of their children. Parents are suffering with some ailment, and they want to secure future of their children, so they create a trust. Because children are minor, they create a trust, and they contribute their assets to the trust, and the trust will take care of the children. Once the children attain the age of majority, all the assets of the trust will be transferred to the children. This is the arrangement of a trust. Okay. Now, if the assets are transferred to the beneficiary of the trust, and the clause says that if the beneficiary dies, then the asset will come back to the trust, then is it a revocable transfer or is it a irrevocable transfer? Guys, Income Tax says it is a irrevocable transfer because the transfer is happening till the lifetime of the beneficiary. Till the lifetime of the beneficiary, the transfer is happening. So this is an irrevocable transfer and not a revocable transfer. So this is the exception to the rule that revocable transfer is subject to clubbing. Certain revocable transfers are not subject to clubbing. Certain revocable transfers are not subject to clubbing. Even when the transfer is revocable, we will not club the income. If the transfer is revocable till the lifetime of the is irrevocable till the lifetime of the beneficiary, then we will not club the income. Second exception transfer made before 1st April 1961, this is the date when Income Tax Act came into play, which is irrevocable for more than 6 years. So if a transfer is irrevocable for more than 6 years, we will assume that it is an irrevocable transfer, but the deed should happen before 1st April 1961. Guys, from your exam standpoint, this exception is the most important exception, okay? Till the lifetime of the beneficiary, if the transfer is irrevocable, then we will say that it is an irrevocable transfer, and clubbing provisions will not apply in this kind of a transfer. That is the bottom line. Okay, I hope you got this particular point right. Yes, sir. All right, let's move on to the next section, and the next section is remuneration to spouse. Now this is a very, very tricky one, guys. You know, with remuneration to the spouse, the people can actually play certain tricks to reduce tax, to evade tax. With spouse salary, they can play certain tricks. They can do some wrong things, for claiming some deductions with respect to spouse. So now we are going to consider that. So remuneration to the spouse, what are the provisions which are related to remuneration to the spouse? That is what we are going to deal in now. All right, so remuneration to the spouse, section 64(1)(2). In what circumstances will the remuneration of spouse be added to the other spouse? So Mr. A, Mrs. B, Mr. A, Mrs. A, two spouses are there, Mr. A, Mrs. A. Mrs. A is earning income, Mr. A is earning income. In what circumstances will the income of Mrs. A be added to the income of Mr. A? That is what we are going to study now. Remuneration to spouse. All right. Okay, sir. Now, guys, assume that there is a company. Assume that there is a company. Okay. And Mr. A is drawing salary from that company. Mr. A is also a shareholder of this company. And this company is also providing certain salary to Mrs. A. Salary is provided to Mrs. A also. And the best part is Mrs. A is unqualified. She is not qualified enough for this salary and for this job. Mrs. A is unqualified. Guys, in this situation, typically in this situation, we can presume that since Mr. A is holding some interest in company, Mr. A, to avoid tax, is forcefully giving some income to Mrs. A. This is how we interpret this particular provision. Mrs. A is unqualified. Mr. A, owing to his substantial interest in the company, since he's a shareholder, he's a substantial interest shareholder. Since he's holding substantial interest in the company, he is deliberately forcing income towards Mrs. A. And that is when salary of Mrs. A should be clubbed with Mr. A. So on a very, very broad perspective, I've explained you this particular section. All right. So let's come on to the fine blueprint of this section. What are the wordings of this section? Remuneration to spouse, section 64(1)(2). Remuneration to spouse. So remuneration where the assessee has substantial interest in the concern. So where Mr. A has substantial interest in the concern, where Mr. A has got substantial interest in the concern, then guys, income of spouse to be clubbed with the assessee. In case Mr. A has substantial interest in the concern, then income of Mrs. A should be clubbed with Mr. A. Income of Mrs. A should be clubbed with Mr. A. That is the consideration. Okay, sir. Where assessee has substantial interest in the concern. If assessee, Mr. A, has substantial interest in the concern, then income of Mr. A will be clubbed with income of Mr. B. Mrs. B. Mrs. B's income will be added to Mr. A's income. Now, sir, what do you mean by substantial interest? We'll be studying it in the next slide, guys. Okay. Now, where both assessee and spouse have substantial interest in the concern, there can be a situation where Mr. A and Mrs. A both are having shareholding in the company. So in this particular situation, Mrs. A also has a shareholding in the company. Okay, guys, many people have their spouses holding shares of their company. This is a very usual industry practice, a very usual industry practice. So now, where Mrs. A also has a substantial interest in the company, where both of them are having substantial interest in the company, then what will happen? So in that case, where both of them have substantial interest in the concern, then both whosoever has income from any other source, where both of have income from any other source, so obviously there will be some other source of income also for both of them, like they might be earning some interest from fixed deposit, or they might be earning some dividends from shares which are held in some other company. So where they are having any other source of income, then income shall be clubbed in the hands of the person whose other income is higher. So in my example, Mr. A, Mrs. B, Mr. A, Mrs. A. Okay, Mr. is also having shareholding in company. Mrs. A is also having shareholding in the company. Now the question is whether salary of Mrs. A should be clubbed with Mr. A, or whether salary of Mr. A should be clubbed with Mrs. A. Whose income should be clubbed in whose hands? That is the question under consideration. What will I see? I will see income from other sources. Suppose income from other sources of Mr. A is 20,000 rupees. Income from other sources of Mrs. A is 10,000 rupees. Then guys, income of Mrs. A should be clubbed with salary of Mr. A. Whose other income is higher? Whose other income is higher? In that person's salary, the other person's salary should be clubbed. So where both of them have other income, where both of them have income from other sources, income clubbed in the hands of the person whose other income is higher. Whosoever's other income is higher, the income should be clubbed in hands of that particular person. Where both do not have income from any other source, where both the assessees do not have income from any other source, then no clubbing provision will apply. Both of them will be treated as equal. Both of them will be treated as equal. So in case where both have substantial interest in the concern, we have two situations. Number one, where both have income from any other source, then income will be clubbed in the hands of the person who has higher other income. And if both have don't have any other source income, then clubbing provision will not apply. That is how we are going to club the provisions. Now there's an exception to the rule. Exception. What is the exception to this rule of remuneration? Guys, let's see the exception now. Exception is remuneration generated through the technical or professional qualification of the spouse is not clubbed. So if I tell you, in my example, if I tell you Mrs. A is a CMA, cost and management accountant, and she is handling the entire cost accounts of the company. Mrs. A is a cost and management accountant and she is handling cost accounts of the company. Then guys, her income will not be clubbed even if both of them are holding substantial interest of the company, or Mr. A is holding substantial interest in the company. Her income will not be clubbed because she is professionally qualified to do this job. She is professionally qualified to do this job. So her other income will not be clubbed. So this is an exception to this rule that remuneration of the spouse should be added. The remuneration should not be added in case the spouse is professionally qualified. And guys, you need not copy these entire charts. I will be providing PDF of these charts on the WhatsApp group. Please be part of the WhatsApp group. The WhatsApp group number is 9643929913. In this particular WhatsApp group, I will be providing you with all the PDFs of all these chapters, so you can revise these chapters in a very short span of time using these charts. Okay, so don't worry, I'll be sharing these charts with all of you. All right, next is, what do you mean by substantial interest, sir? Who's having a substantial interest? Like in my example, I told you Mr. A is having substantial interest in the company. So what will define substantial interest? What do you mean by substantial interest? Okay, so substantial interest means in case of a company, assessee or his relative hold at least 20% shares in the company at any time during the year. So if the assessee, who's the assessee in our case? Mr. A. Mr. A is the assessee in our case. Either the assessee or his relatives taken together are holding 20% or more shares in the company, then we will say that assessee, that is Mr. A, is having a substantial interest in the company. If Mr. A is having a substantial interest in the company, then any remuneration given to Mrs. A will be clubbed in hands of Mr. A. Will be clubbed in hands of Mr. A. Now, in any other case, in other concerns, which means apart from company, if we have a partnership firm or AOP, BOI, HUF, any other kind of company, then what will happen? Assessee or his relatives are entitled to at least 20% of profits in the concern. Then guys, obviously shareholding will not be there, but profit sharing will be there. So 20% profits if you are eligible to assessee, including his relatives, then the substantial interest provision will kick in. Now, what do you mean by relatives? Relatives means spouse, brother, sister, lineal ascendant and descendant. Spouse, brother, sister, lenient ascendant. Lenient ascendant means the mother and father. Lenient descendant means the children, right? So spouse, brother, sister, father, mother, and children, they are known as relatives. So assessee along with the relatives should hold 20% of stake in the company or the other concern. Then it will be said that this particular assessee is having a substantial interest, and then provision of clubbing will apply to such assessees. Okay, sir, got it? Now, guys, we are coming on to transfer of assets by the spouse. When asset is transferred by the spouse, when asset, you know, earlier we were talking about the situation where asset is not transferred, only the income is transferred. Asset is not transferred, only the income is transferred. We are talking about that kind of a situation. Now we are talking about a situation where asset is transferred from the one spouse to another spouse. Asset is transferred from one spouse to another spouse. Now the catches, the asset will be transferred at a very, very, very low consideration or zero consideration. That is a problem. Asset is transferred at a very, very low consideration or zero consideration. Let's see. Adequate consideration. If the asset is transferred at adequate consideration, so for example, house property was worth 2 crores and spouse was given it at 2 crores itself, no clubbing provision will apply. We have no problems in it. You transfer your house property to your spouse, the rental income will also be henceforth given to the spouse. We have no problem. No clubbing provision will apply if the adequate consideration has been taken from the spouse. We have no problem at all. We have a problem where inadequate consideration is received from the spouse. Then we have a problem. If we are transferring the house property to the spouse at 50% of the price or 10% of the price or 20% of the price, inadequate consideration. Why would you transfer some asset to your spouse for an inadequate consideration? There shall be a reason for it. If there's no reason, we'll club your income. So what will happen is clubbing of income from the asset in the hands of the transferor. Whatever income will be earned by this particular asset, whatever income will be earned from this particular asset, the income will be taxable in hands of transferor. I'll give you an example, guys. Let's take a small example. Mr. A Mr. A transfers his property to Mrs. A. The value of the property was 2 crores, but it was transferred at 1 crore. Mrs. A starts receiving rent from this property. Since Mrs. A is the owner of this particular property now, Mrs. A starts receiving rent from this particular property. Now, Mrs. A is definitely a recipient of the rent of this particular property, but the rent should be clubbed in hands of Mr. A. Why? Why? Because Mr. A had transferred this asset to Mrs. A at a inadequate consideration. At a very, very less consideration, Mr. A has transferred this asset to Mrs. A. Therefore, the income which is earned by Mrs. A, it is clubbed in hands of Mr. A. Income which is earned by Mrs. A, it shall be clubbed in hands of Mr. A. That is the provision. So the concept is very simple. In case of inadequate consideration, clubbing of income from the asset in the hands of the transferor. Whosoever has transferred this particular asset, clubbing shall happen in his own name. The clubbing shall not happen in the name of the transferee. The income shall not be said that transferee's income is there. It is not transferee's income, it is transferor's income. Clubbing shall happen in hands of transferor. There are certain exceptions to this rule. What do you mean by exceptions? Exceptions means even when Mr. A transfers some property to Mrs. A at a lower consideration, even then clubbing will not happen. What are those situations? What are those situations? Let's see. Number one, agreement to live apart. This is a situation of a divorce. Guys, in case of a divorce, Mr. A may transfer certain property to Mrs. A at a very, very, very low consideration. There is a possibility to it. In that case, rent income which is accruing to Mrs. A shall not be clubbed in hands of Mr. A because there has been a divorce between Mr. A and Mrs. A. There has been divorce. Divorce means agreement to live apart. So if the asset is transferred pursuant to a divorce, pursuant to an agreement to live apart, then clubbing provision will not apply. Second exception, cases covered under section 27. So what is this section 27? Guys, let me remind you, we had studied income from house property. And in income from house property, we had studied a section deemed ownership. Deemed ownership, which means even when one of the owner is not the owner of the property, he will be deemed to be the owner of the property, and income from house property shall be taxed in the hands of the deemed owner, right? For example, holder of an impartable estate. Holder of an impartable estate. So there is an estate which is impartible. Partition cannot happen of that estate. And I still remember the example which I gave you when I was revising house property with you. The example is, there are four brothers who are owning 4 floors in a particular building which was owned by their father. Father had transferred the building in the name of the eldest son. Eldest son had given 4 floors to the 4 brothers. Guys, the terrace area is the common area. The ground area is the common area. Now, these areas are definitely not a partition label. I mean, I cannot partition these areas, right? Then these areas will be taxable in hands of the holder, whosoever is holding it. Suppose the eldest son is holding it. Eldest son will pay taxes on this particular asset. Although this asset belongs to all 4 of them, but whosoever holds the asset, he will be deemed to be the owner. So such conditions were there under section 27, right? So wherever 27 section applies and deemed ownership is already applicable in those cases, specifically in case of house property only, building and land, okay? In case of house property where section 27 applies, we will not apply section 64, because income is already clubbed or income is already taxed in the hands of the deemed owner. The rectification has already been done under section 27. Need no rectification now. We do not need any clubbing now. When the rectification has already been done by section 27, we are fine with it. We will not apply section 64. When once remedy has been provided under section 27, remedy under section 64 is not required. So in those cases where deemed ownership principle applies, in case of house property under section 27, which actually is income from house property, guys, in those cases, the provision of clubbing will not apply even when inadequate consideration is given. Okay, sir, got it. So this is a very, very good exception, guys. 27 section, if 27 applies, then 64 will not apply. Obviously, we will not club one income twice when it has already been clubbed under section 27. Why would we again club in section 64? All right, this is a very nice picture and I love this picture. Especially I love this Punjabi lady who's smiling in this picture. That's why I love this picture, guys. This is a very good picture which is explaining income on income concept. Concept of income on income is explained by this particular picture. Okay. Income on income. Okay. Okay, I'll explain you the provision. I know you will not be able to see whatever is written in this particular picture. No, you will be able to see partially. All right. So, husband gifts money to wife. There is a Punjabi Sardar guy who's earning good money and he is transferring some money to his wife. No tax exemption for given. Gifting money does not reduce the taxable income. So when husband gifts money to wife, wife receives this money as a gift. Wife will pay no income tax if the money received comes from the husband. If the money received is from friend, full amount is receivable and taxable as income. So guys, wife will not pay any taxes on this particular gift which is received. Okay, this will not be taxed as gift tax. We had studied section 56 of income from other sources. If you receive any gift from relative, it is not taxable in hands of wife. Okay, currently we are not dealing with clubbing sections, we are dealing with gift section. We are just discussing gift sections. So this gift which is received by the wife from the husband will not be taxable in hands of the wife. Okay, now we come on to our point. Our point is not whether this will be taxed as gift or not. Our point is whatever income has been earned by the wife using this money of the husband, whether that shall be taxable in hands of wife or in hands of husband. That is the question which we want to know under the clubbing provisions. Let's see. Now what happens is wife invests the gifted money and earns some income. So what does wife do? I'll tell you what does wife do. So 1 lakh rupees has been received by the wife. Okay, wife invests that money. Wife invests that money and wife earns some income from that particular money. Okay, wife invests that money somewhere and wife earns some income from this money. So wife earns 10% from business, whatever business she has opened. So wife earns 10,000 rupees from this money which has been received by the husband. Wife earns 10,000 rupees. So income will be clubbed with husband's income. Because clubbing provision apply, husband will pay tax on this income. So guys, on this income, 10,000 rupees, who will pay the tax? Husband will pay the tax. Because this income will be subject to clubbing provisions, and according to the clubbing provisions, income which is accrued to your spouse whom you have gifted some asset without any consideration, that will be clubbed in hands of the main spouse who has gifted the money. So 1 lakh rupees was gifted by main husband, right? The husband, the main spouse, right? He has gifted the money to his wife. Now wife has earned 10,000 rupees. This 10,000 rupees will be taxable in hands of husband owing to clubbing provisions. Now next part. income gained from income income of gifted money. Now this is a very, very important point, guys. Wife reinvests this 10,000 rupees. Wife reinvests this 10,000 rupees in some mutual funds, and mutual funds yield a dividend of 2,000 rupees. Mutual fund yields a dividend of 2,000 rupees. Now first income was 10,000 rupees, which was from business which was run by the lady, right? This was clubbed in hands of the husband, right? Now lady from this money had invested this money in mutual fund. From mutual fund there is a dividend of 2,000 rupees. Now the question is whether this 2,000 rupees will be again clubbed in hands of husband, or this will be taxable in hands of the lady. Answer is this will be taxable in hands of the lady. Because guys, clubbing provision only will apply till this point. The clubbing provision will apply. Clubbing provision will not apply beyond this point. Beyond this point, clubbing provision will not apply. Clubbing provision will only apply till this particular point. Beyond that, clubbing provision will not apply. So income from income. This is income number 1. This is income number 2. So income from income is not clubbed. Let me repeat. Income from income is not clubbed. This is the concept of income on income. So what does it say? Wife will have to pay tax on this income. Clubbing of income does not apply. So the second income which is there, clubbing provision will not apply on the second income. Clubbing provision will only apply in the first income, on the first income. That is the provision which is stated over here. Okay, sir, got it? So yes, this was an interesting provision which has been introduced in the act. And yes, the income on income is not taxable, but the main income is taxable. Now we come on to the last aspect of our chapter, guys. Last aspect of our chapter, income of a minor person. Clubbing of income of a minor person. Minor person means a person who has not attained the age of majority, which is 18 years, right? Let's see what is the provision for income of minor child. Let me expand this a little bit so that visibility is absolutely fine for all of you. Okay. I hope the visibility is fine. Okay. Now, income of minor child. In what situations will it not be clubbed? In what situations will it be clubbed? So, no clubbing. In the following cases, income will not be clubbed. Number 1, income earned by minor on account of his manual work. If the minor is doing some manual work and on account of his manual work, the income is being accrued, so clubbing provision will not apply. If due to manual work, the income has been earned, or due to skill talent of the minor. Minor is a born singer, minor is a born artist, minor is a born dancer, and his income accrues due to his own talent, then the income will not be clubbed in hands of the parents. Income will not be clubbed in hands of the parents. Next is income of disabled child, deceased specified under 80U. 80U is a deduction, guys, and there are certain severe disabilities. So there are certain diseases which are specified under section 80U. If the child suffers from the diseases which are specified in 80U, then his income will not be clubbed. Whether he is earning that income manually from himself, his own hard work, or not, income will not be clubbed in these 3 cases. So 3 cases where income will not be clubbed. Now the cases where income will be clubbed. All other cases like investment income or interest income, the income will be clubbed in hands of the parents. Okay. Clubbing will be done in hands of the parents whose total income is greater. Now the question is, in whose parent, in which of the parent hands the income should be clubbed, mother or father? So answer is whosoever's total income is higher without including such income, whosoever's total income is higher, in that particular person, the income clubbing should be done. So if father's income is 10 lakh rupees, mother income is 12 lakh rupees, then in the hands of the mother, the clubbing should be done of the income which is earned by the minor, right? Then one more provision is there, that in case marriage doesn't subsist, so in case both the parents are living apart, they are divorced, in case both the parents are living apart, then guys, clubbing is done in hands of the parents who maintains the child. Then the principle of higher income will not apply. Then the principle of higher total income will not apply. Then the principle will apply that whosoever maintains the child, whosoever whichever the parent is responsible for maintaining the child, in his hands the income will be clubbed. Okay, so that is the rule. And the last is we have an exemption of 1500 per child. There's an exemption from clubbing. So whenever you club income of a child in hands of the parents, then 1500 can be deducted from it. Okay, 1500 income shall not be clubbed. Over and above 1500 shall be clubbed. So this exemption is available, 1500 per child, in case clubbing provisions are applicable. 1500 rupees you should not club. Apart from that, whatever is there, you can club. So this exemption is there under section 1032. This exemption shall be applicable in case of income of clubbing of minor child. So yes guys, these were the provisions of income clubbing of minor child which are applicable in your particular case. And yes, by this we conclude our today's session, and I'm just checking if any section is remaining. No, none of the sections is remaining. So we are probably done with all the important sections of this particular chapter called the clubbing provisions, right? Now, clubbing is a very, very important chapter, a small one, but I have told you it holds a good percentage in your examination. You might get some good questions from this particular chapter in your examination, but not of very large marks, okay? Maximum 4 marks, okay? So don't give a lot of attention to it, but yes, considerable amount of attention is required by this particular chapter. So we'll be meeting in our subsequent sessions, guys. In the next week now, Tuesday, we'll be meeting for our further chapters. We have completed clubbing, and yes, we have almost completed 60% or 70% of our revision of the important chapters, guys. The rest of the chapters are not that important, and in one of the sessions I'll be also giving you list of all the important chapters of your syllabus, and which chapters are high important chapters, which chapters are low importance chapters. I'll be giving you all those analysis in my forthcoming lectures. So yes, we'll be meeting in our subsequent sessions, and before we sign off, please hit a like button on this particular video. If you like this video, share it with your friends, with your WhatsApp groups who are studying CMA, because these videos are exclusively dedicated to CMA students. So yes, hit a like button, and we'll be meeting subsequently in our subsequent session in the coming weeks. Next Tuesday will be the next session, but guys, this Sunday there will be a test of income from other sources. The entire chapter test will be there, so be prepared. This Sunday 7 p.m. test of income from other sources chapter. Let me tell you the date as well. Date is 15th of May. 15th of May, income from other sources, entire chapters test is there. So do join the test. And Dhruv Jain is avoiding the test these days. Dhruv, you should come back to the test. You should give test, because you are not giving test for a very long time. Dhruv Jain will come to the test this Sunday, guys. All right, guys. So we'll be meeting in our subsequent sessions. And yes, these charts along with income from other sources charts, I will be sending you the PDFs on the WhatsApp group, and I'll be uploading all the PDFs on the Google Drive as well. And guys, on the Google Drive, these classes which I'm recording on YouTube, I am downloading and uploading them on the Google Drive also. There the quality of video will be much more enhanced. There the quality of video of these videos will be much more better, because the live session quality is a little reduced. So I'm uploading those videos on the Google Drive also without encryption. They are free from encryption. You can download them and you can use them whenever you want. You can save them on your laptops or your mobiles, watch them whenever you want to watch. So those videos are also available on the Google Drive. These revision marathons are available on the Google Drive as well without encryption. Make best use of it. All the very best and happy studying. Bye bye. See you in the next lecture, Tuesday.